YouTubers, Mike Martin's here. Mike Martin's channel. Thanks for joining me, guys, for another important article. This is probably one of the most important ones I'm going to be reading for you probably this month, because Canada is doing the whole liquidity thing. And what am I talking about? I've got so many messages from people, but I kind of wanted to make sure Better Dwelling was on it first, because Better Dwelling is like our fact check back up against the dinosaur mainstream counterfeit media. So here it is. Better Dwelling. Canada's central bank is getting ready to provide mortgage liquidity. Okay, here goes. Relax, everything's fine. Or maybe it's not. The Bank of Canada, BOC, quietly made plans to buy government-backed mortgage bonds last week. So they're gambling on bad debt, guys. And if you guys remember what happened in 2007 and 2008 in the United States of America and why it tanked, it's a hollow shell, guys. It's just a hollow shell is what it is in the end once you start doing this crap. The move is designed to increase the bank's assets and arguably assist the housing market. Okay, sorry, somebody walked in. Last week, the move is designed to increase the bank's assets. I don't know if I read that already, but I think I did. And arguably assist the housing market. Oh, see, they're trying to prop up the housing market. It's not going to work. They did this in the United States of America, and it faltered. It faltered so bad. That sounds great until you realize how these things work. It's similar to set up to one of the U.S. Federal Reserves created 10 years ago. Remember what happened 10 years ago? People are forgetting. Central Bank Balance Sheets 101. The BOC balance sheet is like any other, filled with assets and liabilities. Assets are anything they pay for, and usually government or Canada bonds. Liabilities are anything they give out, like the roll of loonies you pick up for laundry or deposits in your bank accounts. When a central bank buys assets, they do it by creating the accounts of the seller, usually with money that didn't exist before. Remember this whole fractional reserve crap that's going on? The cool monetary policy, kids call it a print. And they are strategic for inflation. Exactly. Editor's notes. There are no cool monetary policy, kids. That's exactly that's true. Central banks buy assets to increase the money supply. Oh, God, you don't want to do that. Since a print is usually required, this is strategic. Used with interest rates to maintain inflation at targets, sometimes a central bank can't find enough assets to buy or needs to provide market liquidity. In this event, they'll expand their mandate on or the types of assets they intend to acquire. The BOC is basically announcing both. Okay, that is not good at all. The Bank of Canada will buy Canada mortgage bonds. Oh. The BOC announced it plans to buy government-guaranteed debt issued by Crown corporations. Canada mortgage bonds are the first to be bought on non-competitive basis in the primary markets. The buying will begin at the end of this year or nearly 2019. The BOC reiterated that this for a balance sheet management proposes and has not implication to monetary policy. Oh, really? This has no implication to... Okay. To reiterate, Canada's central bank is buying assets from federally owned companies guaranteed by the federal government with... Oh, God. Bombardier, let me guess. With money they're authorized to print by the federal government, secured with assets by the federal government, and it won't have an impact on monetary policy. I gotta see this, man. Well, take that statement at face value today, and move on to more important things like what are CMB. So, guys, pay attention to this, guys. Canadian mortgage bonds, guys, pay attention. This is very important because it's going to affect everybody in the English-speaking world. Why, Mike? Because you're talking only about Canada. Well, it's going to happen everywhere else in every other English-speaking country. Canada mortgage bonds, CMBs, are one way lenders can access cheap funds for mortgages. There you go. Investors fork over. Why? Because no one's depositing money in their bank accounts anymore because no one has money. Investors fork over crash CMHC guaranteed loan backed by the federal government since The chances of CMHC and the government of Canada disappearing overnight are slim. They're considered secure. Secure investments don't pay all that much, which is great for lenders and or borrowers. Low-cost funding means more profits for lenders and less interest paid to borrowers. Like, so who's going to buy this crap? Canadian mortgage credit growth real. So this is the Canadian mortgage credit growth. So these are recessions here. There's the adjusted. And then you have right here. So there's the adjusted as you go. And remember, this is Canadian mortgage credit growth. So it's going down big time right now, only because banks are finding it hard to lend out, and they're out of liquidity. So they have to by creating these bond-backed securities that failed horribly in the United States and brought down the entire country to its knees. And taxpayers had to bail out and clean up the party later. Depends on who you are and the amount of CMBs you bought. The upside is the increased liquidity, which may suppress rates from rising too fast. That would translate into lower funding costs, some of which are passed on to borrowers. Oh, funding costs are passed on to borrowers. That's not good. On the other hand, it's a sign that market weakness. Ding, 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 ding. We have a winner here. No whammy, a winner. The central bank only provides liquidity ahead of liquidity corners. Mortgage credit growth fell to multi-year lows, like what, 1980 now? And it's likely to drop further as they hike or neutral policy rate. At any time we see the government's institutions step in to address liquidity concerns, it's a bad sign. Further, this second mortgage liquidity tool proposed just this year. It's a tool, guys. This is going to help us. Earlier this year, the Office of Superintendent Financial Institutions said that they're looking to expanding the covered bond program. The covered bond program is another tool provided low-cost financing for mortgages if everything is fine. Why is the government stepping in to help out on so many levels? Guys, remember, the more government involvement, the more red tape, the more, looking into things, the more unnecessary, stripped of freedoms that we used to have. Why? Government's getting involved in Uber and trying to a cash grab to get extra licensing for Uber drivers and specific inspection on vehicles and health background checks and criminal background checks. That's what's happening to the housing market too. Government should let it go. Let it go. Push the reset button. Why? Anyways, guys, let me know what you guys think. I made sure I found a reputable source that could give me this information before I put anything out there. It's been a few days now they announced this, but I wanted to make sure before I blew any hot air out there that it was actually happening, and it was for sure. Let me know what you guys think in the comments below. Don't forget to hit the subscribe button, guys, and follow me. Thank you so much. Good night. Goodbye. Good evening.